Hello and welcome to another update video about FETCH.AI. So FET has dipped into that support zone. We talked about it only yesterday and we've had a nice reaction to it. Another dip, another touch of support, and we're moving away from support again. So we're holding support, we're holding that micro support zone that we talked about. And we talked about a wave 1, we talked about a wave 2. That was our 1-2 setup down here, right? I think at the time I didn't have this labeled, but we had this 1-2 setup, and the idea is we could be in a third wave, which looks very choppy. Well, we don't really have any overlap there, only here, but this is not so important. So as per yesterday's update, while I don't like the microstructure in this third wave, after the wave 2 found support where it needed to, by the way, I will remove the larger support zone now. We don't need it anymore. Try to keep the chart as clean as possible. So the idea is we're on a third wave. We've already reached the first ideal target for this third wave. And we could be still though in the third wave because first of all, it was only the first target. The idea was that when we moved into the support zone yesterday, because it looked so choppy and really based on the microstructure, one more high would look better in this third wave, that we get one more high. Now we've had a reaction to this support, and this support area is defined based on the length of the internal third wave. It's typically the 23.6 FIB level and the 50% FIB level. Then the price dipped into it, right, and then reversed. Now, okay, is this all of wave 5? I mean, it could be, it formed even a higher high, but it's a bit too weak. So my preference would be, at least as long as we're holding above 160, one more high to at least $2.11, maybe even $2.25, in an extended fifth wave of the third. Why do I prefer that? Is it just because I think it looks best? Well, yeah, but not only. Again, it's unusual in a bullish market that a third wave only reaches the first target. Also based on microstructure. So one common target for a fifth wave is the same, well, it's the length of the wave 1. So we would actually look at possibly 228. Yeah. So this is one key target. Another way of measuring is I mean, that's provided the wave 4 is bottomed already, right? But we can measure the length of waves 1 to 3. And then we're looking for the 61.8 extension and the 38.2 extension. So the first one is $2.07, an extended one $2.34. So we should, even though there are different ways of measuring and calculating, they all point towards higher prices, right? So that's at the moment my preference. However, there's always a level when I would change my view. So if the price now breaks below 160, the 50% retracement of the third wave, I have to assume that we're already in the larger third wave. It wouldn't look great because there's risk of overlap between waves 1 and 4. So ideally we push higher, which would then also shift this support area for the larger fourth wave higher. And there's a low risk for an overlap between waves 1 and 4, which would keep the idea of an overall upside impulse alive. That's the update about FETCH.AI. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, please make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.